Welcome traders to a new educational video where I'm going to recap a trade that I've executed this week on Amazon. Why did I decide to trade Amazon particularly this week? One of the main reasons that made me trade Amazon is the daily chart. You can see that on the daily chart, Amazon held the 50 moving average and bounced off it a few times. And in fact, the 50 moving average is a strong swing trading moving average. Usually, when the price drops into the 50 moving average, swing traders jump in, they buy, and they set a stop loss of one daily ATR below the 50 moving average. As a day trader, I usually wait and see how the price is going to react around the 50 moving average. And if it closes as a hammer or a green candle or a doji around the 50 moving average, I usually look for a bounce. So along with us bouncing from the 50 moving average a few times, you could see that there were double hammers above the 50 moving average, which also indicated strength. All these showed me that today we're most probably going to go to the long side. The 60-minute chart though did not show me much confirmation. It was a little bit choppy, so I decided to look at a smaller time frame, which is the 5-minute chart. And I zoomed it out all the way to yesterday. There you could see that there was a previous resistance level that could act as a support today. This was the zone or the area of interest where I wanted to buy Amazon to the long side. And I started my position actually in the pre-market. So let's actually go to trading terminal replay feature and see how this trade looked like real time. So 29th of August on Amazon. You could see that we did hold the 50 moving average 3 times in a row, and the last time we closed as double hammers. This is an indication of strength. And like I mentioned to you, on the 60-minute chart there is not much to see. We're just simply chopping in channels. We're below this high, we're above this low, there are no clear levels, so we can't tell much looking at the 60-minute chart. The 5-minute chart formed better levels. You could see that approximately somewhere around here we have an area or a level, resistance, 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 and it's kind of holding somewhere around this area. This is why I actually initiated my entries or initiated my position in the pre-market. So I started building my position somewhere in the pre-market, and you want to get into the long side as close as possible to the level of support. This is the level of support, that's going to be your stop loss, and you want to scale in slowly. I did not get in full into my position in the pre-market because you know that after the market open you could get some volatility, and that volatility could cause the price to drop and wick you out. That is why in the pre-market I entered just with a few hundred shares, and I decided to hold for the remaining position after the market open. If we retest the pre-market low one more time, similar to what happened on Apple, I would be adding to my position and I would be going heavier full size. Now that I'm in, I want to decide where exactly my target is going to be. Zooming out, I could see that there is a level of resistance approximately around 134.25, and that basically would be my target. The moment we approach it, I am starting to scale out or take some partials somewhere around the level. So that's basically it, guys. One of my advanced strategies where I try to determine where the market is more likely going to go to looking at higher time frames, find levels looking at smaller time frames, and if I see that it's being held, it doesn't matter whether it's in the pre-market or after the market open, I start scaling in and I take the partials either at the ATR target or around the levels. If you enjoyed this video, make sure to hit the like button, share and subscribe to our channel. Your comments are appreciated, and if you have any questions, make sure to type them below and I'll talk to you in the next video.